Okie doke. Thank you, Anita. And Heidi ho, everyone. Welcome aboard. It is a brand new week of Trading Buddies. And thank you for being our Trading Buddies. It's nice to have you on board. Those of you who have not been here before, I'm not sure there's any in the room that haven't. But if that's the case, special welcome to you. Don't forget, always, this is your show, not ours. And it's there for you to contribute if you so choose, certainly to ask questions. If you've got something to share with us, then by all means, we're happy to have you even come on camera, ask questions, come on mic, whatever you want is all good from our point of view. I'm hearing an echo in my earphones. I'm not sure why that's the case. Anyway, we will battle through and let's get going, shall we? Radio. Now the echo is gone. That's good. All right, let's start with... We won't start with the weekly game changer bars. We'll start with an update on all the trades that we were in. Well, the three of them that we were in, I think, by Thursday. Firstly, euro dollar. Euro dollar, I moved my stop loss to here on Wednesday, or actually on Thursday, and the news took us out of that trade. That's fine, considering we got in up here somewhere, and we took 3 lots of profit on euro dollar. So happy with that trade. And of course, the trailing stop has now been hit. A little hint of a double, well, it's more than a little hint of a double bottom here. And that's kind of my way of thinking at the moment. And whilst it would have been nice for this to kick through that low, we're happy with the trade, obviously, and nothing more to say on that one. It was a very clear false break, and I think false breaks at the moment are probably one of the best things on the board. Hey, bud, Paul P, I'm talking to. How are you, mate? Have a good week ahead, I trust. The second of our trades was the Nasdaq. Nasdaq, I have also trailed my stop loss. This is supposed to be that day of the month, isn't it? The third day of the month where the S&P goes long. That wasn't really in my calculations, but it may well be the case. The Nasdaq follows that if indeed it does take place. Reasoning here was pretty much putting the stop loss above Friday's candle, and if that was to be the turnaround point, then I'm more than happy to be out at that level. Again, considering that we were in this for a week or so, a couple of weeks maybe, can't remember. Certainly got in up here, may have been a couple of weeks. And again, 3 lots of profit on that, so nice trade. The third is still in the market. It is Euro Swissy. Euro Swissy we got lucky, to be honest. You know, there's nothing more to say about that. We got lucky to have as many pips in the bank as we do. At this point, this was happening whilst we're on air on Thursday. And with any luck at all, will continue to fall. I have once again moved my stop loss above Friday's candle, and I think if price goes back to there, it's probably going to come back into this range, and anything can happen from there. But whilst we're on the march here, we're probably thinking this level, then that level, and if that's the case, happy days. I will probably update that and maybe trail it on a daily bar. Depending on what happens today, we could be taken out, but we'll see how that progresses. Let's check in on the pound with the market in London about to open. Do we have a nice little range that we can trade? High of Friday is there. Low of Friday is there, and today is inside all of that. So there's your range. 192 pips. How much have we got? I don't think we've got anywhere near that available. Once again, even down to there, it's not 192 pips, but we're going to have to get through that level as well. So that low side's a no from me, and the high side's a no from me as well. I'm going to have a good look at this because we're not getting any trades or of late, and I might come back to trying to trade the break as a second opportunity, the break of today's range. but I won't trade it per se. I'll wait till it breaks and comes back. I'll do that anyway. Anyway, no trade on that. Very quickly, the euro dollar. I just want to quickly go back to that one and take a look at what we've got going on today. Well, we've gone straight through the daily pivot. We haven't got, I'll get rid of that trailing stop mark there now. We haven't got an edge, therefore, suggesting that the daily pivot is going to be tested, because it already has. In fact, it's been tested and then broken. Will it come back to it? Maybe. I don't know. Have I got a directional bias today? Well, like I said, this does look like a double bottom to me. And to trade that long, or to even confirm that that's a potential reversal, I would need to see a higher low. So maybe we're working on that today and putting in a higher low in this vicinity. So would I look to trade it short? Look, if the opportunity arose, then why not? I don't think that's the silliest move on the planet. And what would I need to see? Not too much, I don't think. False break of that level makes sense. Profit before the daily pivot, and away you go. Righto, game changer bars for the week. That's not the chart I want. That's the chart I want. And the weekly game changer bars begin with Aussie Kiwi. For those of you who don't know what I'm talking about, by the way, game changer bar for me is you may be familiar with the term key reversal bar. Key reversal bar is a bar whose high is higher than the previous day and closes on or near its low. It is also true going in the opposite direction. Is there one here? That one's good enough. Creates a new low on the previous day and closes on or near its high, as that one did. And as you can see with that one, that went pretty well, as did that one, as did that one. So that's why I like game changer bars, because they do give you of course, in context, and you have to trade them in context. What context am I talking about? Well, generally it's the primary trend, but not necessarily the trend. It could well be the structure of the market. So in other words, if we're coming off the top of this range here, then we'd be looking to trade it short. So if that happens to be in line with the game changer bar, then that's exactly what we would look to do. This one is. And now you've got to work out whether it's worthy of taking a position based on the risk, which is about 200 pips. The reward potential is very tight here before you hit a support level, which is only 54 pips. Therefore, I don't think this is a great position to take. I don't think it's the worst position, but I don't know that it's the best position either. I like the fact that we'd be, or would we be, entering underneath that level. I think we are. Yeah, we are. We're entering underneath that level, which is 110 basically. And like I've been saying for weeks and weeks and weeks, it's a case of Aussie Kiwi. Once it's above 110, you sell it. Once it's below or towards parity, you buy it. And that's been the case pretty much for a long, long time, years in fact. Let me point that out to you.
Good morning, mate. I might have a potential
hello, buddy.
trade. How are we going?
Go hard. I'm going well.
Yep. Okay, so let's do this and this. Okay. So what we've got is a long on the Ftse, and I will show you my screen. Just breaking this this daily pivot here, and we're just looking for a retracement. So it'll be a buy limit, and if we come and draw the trend line on the 15-minute charts here, and what we can see is a breakthrough of this. Now I have got into this, but you'd want to sort of like look at your limit order being in and around this area here, and if you're going to use the stops, then you probably want your stop under this particular area here. So if it was down there, you're looking at around about a 45 pip stop if it comes up, and around about a 70 pip gain. Let's see if it comes back first. You don't want to enter it if it gets to the weekly pivot, but it looks pretty good today. I mean, we got a US holiday. No major. I mean, this could just kind of explode to the upside because of the extreme downside that we've had. But it'll be unusual. We'd be looking for a retracement, so I wouldn't dive in if you're not in already. It's not a big deal. It's just going to be one of those things. But if it can come back, and you're really looking at this zone here. This zone here as a potential area for a trade. Anywhere sort of around about that daily pivot and below, which is it's going to be around about a 15 pip range that that I'd be saying that it'd be worth getting back into now, but yeah, could well get to that weekly pivot, mate, and maybe beyond. I mean, there is sort of some evidence that there's some trend lines above as well, but I think aiming for that, that looks like significant first contact. This would be probably first contact initially, which is a 30 pip move, but if there's enough juice here, and the thing I think to note is that with the US offline today, then we're really heavily weighted on the Ftse and on the European stocks, and they look okay this morning. So we got Shell kind of up 1.25%, and that would bring me to the oil scenario as well, which we'll have a look at after you finish your stuff, mate. We'll have a look at oil, because I think oil is a buy this morning, and or I certainly think it's a buy this week. Whether it's a buy this morning, we'll see, but it might well be shaping up already. But we'll have a look after you finished.
All right, mate. Happy days. I will continue, and we might slot George in between there as well at some stage, unless there is an order to be had, I suppose, on oil. Let us see. I've got to find my control panel before we go any further. It disappears, and I hate that.
Yeah, it's very, very annoying. I'm sure in the next year or two, Zoom will creep forward again and slightly improve. And it's these things do, don't they? I've sort of found that there's certain things that Windows 11 can do that Windows 10 couldn't do, and I've never really seen a big change between all the new updates. But Windows 11 seems to be a lot better, and I think as time
you're
goes
the
on,
only person on the planet that thinks so. I think. Gee whiz, there's people screaming about it.
What? Where Windows 11? It's the
I don't think
Web
I've noticed
Select.
any difference, but
Web Select is just a brilliant tool.
What's that?
You can grab data and put it into an Excel spreadsheet, and it's all kind of laid out. Rather than having to kind of like punch the data into the whole spreadsheet, you can grab sort of columns and stuff and punch them into an Excel spreadsheet, which I don't think Windows 10 had, but if it did, then just as good. But it's a cracking feature. It's really good.
Privacy, I think, is the main issue. People are screaming about.
Yeah,
wow, they're just going off their nuts.
Probably something that I'm just not that aware of. I mean, I'm sure that there's certain sort of privacy points that I'm getting hacked on here, left, right, and centre. But
at the end of the day, they've got you anyway, haven't they?
They got me, exactly.
There's no escaping, no matter what you do. In fact, they're talking, and I'm sure it's probably about.
And to be honest, I'm not really on. I only really search around the internet for things to do with work. So there's anything that they can kind of push towards me to do with information, to do with trading stuff. I'm more than happy to have a look at. Yeah, exactly.
Wait till you get older, mate. You get all these comfort pills and beds and cushions and all those sort of things in front of you all the time.
I've got a question about got a question about bamboo later, mate. You can get to. Ftse's getting close to that entry point. In fact, Ftse is an entry from here, so you're looking at a 15 pip range. It looks pretty good for the long.
Awesome. Righto, guys. You've got the mail on that one. Let's have a look and see. Hello, Lewis. You can't get in from Zoom. I wonder, is that my problem? Just, guys, bear with me for a sec. I can't see anyone in the waiting room, or can I?
No, I can't either.
Yes, there are. Okay. Admit. Sorry, guys. I didn't realize I had to do this. Try again, Lewis, and I'll notice that you're knocking on the door, and I'll open it for you. We've had, of course, half the staff off for a little bit of a break at the moment, so that is why I'm in. There we go. Here's another one. I hope all you people are nice people. I could be letting in anybody here, of course. I don't see Lewis yet. Admit all. Lewis, there he is. Righto. Now you guys should all be in. I'll keep my eye on that if there's any more need to come in. I can't remember where I was up to. I was talking about Aussie Kiwi, wasn't I? Right. So big game changer bar. And I think, like I said before, the $1.10 to parity range with Aussie Kiwi is pretty much locked in since 2013 here. And every time we get above it, we come back inside it. We've snuck our head through it again, through that 110 level. And now looking to have a close underneath that level again. And this week we have. So we've got a game changer bar that suggests that there'll be downside in Aussie Kiwi. Now I won't trade that just as a reversal bar. What I will do is take note of it as a directional finder, and I'll be looking to trade this short throughout the week. Whether today is the opportunity to do that is, of course, another kettle of fish. What would I need to see? Well, there's a beautiful little scenario poking its head up there right now, and that's it. It's showing me the potential for a false break, not only of that trade line, but also the 110 level. So if I were to get a buying bar here today, tomorrow morning, I would be looking for an entry underneath that buying bar. So again, another potential clear false break if that does pan out. So watch that candle tomorrow. And if it is a bullish bar, then I would suggest an entry underneath it would not be the worst case scenario. As far as today is concerned, would I be prepared to take it on today? Look, I actually don't think so, because I don't have that clear false break staring me in the face. You could say that we're retesting that level now, but really, I think it's a dangerous game if you're playing 4 hour entries on monthly or weekly or daily even trend lines or trade lines. So that situation actually does not exist at this point. So I'd be waiting for a retest of this level, I think, where we've broken out of here. Retest of that level makes sense to me for today. So I don't think I'll be looking to play this short until we do get that. That's Aussie Kiwi. That was the first of the game changer bars. Swiss yen is the second of the game changer bars today. I won't go into depth with this one because it's just like a skyrocket and keeps taking off, and away it's gone again last week. I do have a resistance level there by the look of it, or is that the Aussie? No, there is a resistance level there. It has reached the previous high back in 2014 and looks to poke its head through there at the moment on the monthly chart. Weekly chart, as you know, is a game changer bar to the high side. I expect there will be some resistance here. I wouldn't want to be trading this long at this point. If you are of that ilk, then happy days. If you're in the trade, I don't think you've got an issue, but if you're not in the long here, then I think now is the time to be looking for some pullback. Euro yen also giving us a weekly game changer bar long, and I don't see anything there that entices me to go long. Once again, I'd be looking for a pullback. This is very much the case with a lot of these pairs. Euro Kiwi is the next. Sorry about the mess of this chart. Don't know why. Let me get rid of all this junk. Space junk. Okay, game changer bar to the downside. This level is, or has, got a little bit of history. So the little double top or tweezer top sitting there, or rabbit ears, call them what you want, probably is enticing. What do I need? This is not dissimilar, of course, to Aussie Kiwi. and different currency, of course, but the chart pattern looks very, very similar. Would I like to trade it right now? This is not the worst. I do like this bar here on the daily chart, but really it's a mess in here, isn't it? Is that really something that you want to trade? I don't think it's clear yet. I think we're in a mess. We're in a holding pattern. And until we get away from here, I just don't want to take any risk on board. I think a lower high in this vicinity makes perfect sense. So I'd be waiting for that to happen. And I'm certainly not going to trade it up to there. Couple more, and then we'll check in and see if George is in the room. That one was Euro Kiwi. Pound CAD is another. On the weekly chart, that is a clear and decisive game changer bar. It's a whopper. You'd call that a whopper. And there's absolutely no reason to think that can't go any further. Can I trade it right now? Answer no. We are in a clear downtrend. One bar does not a trade make for me, and I would be looking for a pullback here most definitely. But again, these bars are giving me a directional bias, and I'm looking for at some stage during the week maybe to get into a long, maybe to trade it only back to there, but I wouldn't want to be trading that bar. Certainly wait for a pullback. Pound yen, nice double top sitting there on the weekly chart, and the game changer bar is refuting that. It's saying go long. I'm saying wait, and don't go long. Well, look, if it's in your repertoire, then I'm not suggesting that it's not going long. What I am suggesting is it's a bloody big candle, and the reward ain't that great. Hang on, I'll get that right in a tick. So 600 and let's say 650 pips, and you've got about a third, which is kind of where I like to be as a minimum of TP1. But I just don't like the fact that we're trading straight into that high. And I think that's a dangerous ploy. Instead, again, the lower high would get me interested in trading it short, not long. Tough to be calling. And you know, we talk about the yen, it seems, every week, and can't believe that I even get interested in it anymore. But one day, just one day, it's going to turn around and we'll be able to trade it. But maybe this is not the week. I don't know. I'll be waiting, certainly. Kiwi CAD, again, one of those big game changer bars from the bottom of this downtrend. And again, one bar reversals, not my thing. Waiting for a higher low there before I get interested. Kiwi yen, nice double top sitting there, and similar to pound yen, is telling me to go long. I'm telling it, don't be silly. I'm not going long here. I'll wait for that lower high and look to trade it in the opposite direction. And I think finally, dollar Swissy, big double top sitting there, or tweezer top if you like, and a massive key reversal bar. Of course, that is a game changer bar as well, and may well give us the direction for the week. I'm on board with that, but I need to see price get back up to here to give me that lower high. So everything's very, very similar, mate. Waiting for the potential turnarounds.
The Swissy pairs I'm really interested in, because the Swissy, obviously we had the SNB raising interest rates to negative 0.25% last week. I think they have they're probably able to boast one of the stronger economies, or certainly the ones within the range of comfort, some sort of comfort range, because we got inflation data over there under 3%, which is completely different to everywhere else. Talking about 9% in the UK, we're talking about somewhere near 10% in the States by the turn of the year. But in Switzerland we haven't had that same issue. So we got decent inflation numbers. We've got decent trade balances as well. So they're an economy that is in a pretty good place. Now, the fact that they've raised interest rates was a bit of a surprise. They've gone like point.
Nobody was expecting it. Yeah.
Yeah, and they're still underwater. They're still under the zero line. So they've got some room to kind of like expand again. I think the Swissie's the interesting one, mate. I'm looking for out the currencies. Interesting what you're saying about the Swiss yen as on that point of resistance, because that's problematic. But I really like pound Swiss for a short. but again, right on support. So I don't think it's got a lot of room necessarily at this particular juncture. And you'd really want that pound Swissy to rally a little bit before taking it short. But it looks good. Because I think the UK economy is in a bit of trouble. But Boris Johnson is going really with cap in hand to the Commonwealth, just trying to kind of get something going, because losing the deals in Europe is harming the UK. You couple that with everything else. I mean, it's not even coupling it with it, but you compare that with everything else that's going on. Big problems, really. So I like a pound Swiss for a short, but as I say, on that support level, it's not quite as attractive. We're sort of we're floating it in and around down here, and I think it's probably going to remain down here by the end of the week. But could we get a little bit of upside first? Maybe, but we probably need it. It's getting close, isn't it, mate? I mean, there's a little bit more support. That lower line looks like about the 18th of July on the weekly. That looks like we got some more room to kind of cover for the downside. But it's just getting a little bit close to that to get comfortable. Yeah, there. That looks like the long points. It's got some room. It's definitely got some room. We're talking about a weekly chart here, so it's got some room. But a little bit of retracement would be favourable. But I think fundamentally, got to be looking at the pound Swiss short.
So you think I should be staying in this Euro Swissy like I am? I think that's worthy.
Yeah, I do.
Staying in as well.
Yeah, I do, mate. I mean, I think the Euro slightly different to the UK. The UK is a bit of a basket case, really, but I still think the European area, the Eurozone is in trouble. They haven't raised interest rates; they're at zero. And then you kind of couple that with the rhetoric is getting a bit more hawkish, but why haven't they raised interest rates yet? And I think the reason is because they are concerned. They don't have the protection that many other areas have. They're right next to Russia. They're involved in that whole situation and scenario. So not as comfortable for the Eurozone to start hiking interest rates in the same way, certainly that we've seen from the States. So yeah, I think ultimately that probably drops again. Might get a bit of retracement as speeches come out and whatever else. But I think sticking with a Swissy long in just about anything right now is decent. Maybe against the dollar is a little bit more tenuous, but and as you say, the yen is a difficult one because of what's going on there. And the Bank of Japan have come out and said that the weakness of their currency is kind of double-sided. Yes, it could boost things, but their trade balances, again, Japan's trade balances, they're atrocious. That they should not be where they are. And it's really interesting to see the dynamic here. Who's really benefiting from where we are, and it changes from country to country. It gets kind of passed over. One person's pain is another person's pleasure. I don't think Russia are getting anywhere near as badly hit as it was initially anticipated. And because of the deals that they're kind of doing with China, they're providing more oil to China than anywhere else. So you've kind of got these two nations, really, that could possibly find their way through this whole mess in a better way than everybody else. And the fact that Russia is the perpetrator is kind of interesting, It's kind of
very interesting. 100% very interesting, especially with all the resources and everything that is at stake. That's the key to me. It's not just a case of, okay, we're at war. It's a case of we're at lockdown, if you like, for resources. Yes. That's kind of the way I'm looking at it. And what comes out of that is quite interesting. I was talking to another chap earlier in the day about the potential for, as I talk about every week, I think, the potential for the reserve currency to be changed from the US dollar. And, and Gary, you're 100% right. The talk over the weekend was that the war is going to continue and continue. If that were to become popular, that, let's say the resource-rich countries said, well, look, I don't want you to pay us in US dollars anymore for our resources. I want you to pay us in in the case of Australia, Aussie dollars, or in the case
Yeah.
of wherever.
Yeah.
Just like Russia's, talking about. I don't know that it would take that long for that to happen. It's hard to imagine that can happen overnight, but
yeah. Well,
I've seen things happen overnight that I never expected before.
It would take a tectonic shift between the political outlook of the nations that you're now mentioning, because Australia is so closely tied to America. It wouldn't be tactically very wise to do that. But yeah, countries obviously like Russia, this is a completely different picture, isn't it? I mean, they have got another superpower with China that they can kind of buddy up with, and they can probably draw a couple of the other ones, in that particular region. India would be a really fascinating one. Where do they sit?
Yes. 100%.
So yeah, mate, it's fascinating times, really. But I think, for on the face of it right now, what we seemingly have is a divide between regions. And just to kind of finish on the point, I think the Swissy, the Swiss region is a good region to be looking at economically, and therefore I think the currency may well strengthen further. They had a pretty big move the other day, so they might retrace a bit, but I think they're going to strengthen further.
Cool. Lewis is trying to goad me into looking at dollar yen. So I'm having a look at dollar yen, and what do I see, Lewis? I see something I don't want to have anything to do with, as always. But I take your point. You've got a double top sitting there. You've got a potential for this to be, I guess, a left shoulder, I guess a head. But if you look at it the other way, isn't that a left shoulder? What if we get a right shoulder there?
I mean, you've just got no fundamental reason to go long yen. It is the dog. It really is of the currencies and the economies. It's the dog. It's just not. It's not worth it. It really isn't. Everybody's going to be kicking the yen for a while, and so therefore, it's just if you trade the yen because global growth is slowing and you trade it as a fair trade, then it doesn't make any sense to me. Trading a currency just because everything else is weakening, it's got no foundation, in its own right, and that's what you'd really want to see from Japan. It's got no or little little foundation in its own right. So just can't see it, mate.
Yeah, look, the only thing you can the only thing you can really look to trade is retracements, I suppose, if you're trading retracements. But to actually trade a reversal and be serious about it, is really a tough call until it happens, and then you're a genius. It's as simple as that.
Yeah, I think we'll get a message though. I think we'll get a message before that. I think that there will be some statement from the BOJ, or there'll be some number that kind of comes out which does suggest that we should be maybe looking at long yen because they're about to move interest rates. But right now, they've got no indication that that's going to happen.
Yep, true. So, Lewis, if you haven't been told today, I'm telling you. I don't want to know.
Avoid it. Yeah, avoid it.
Well, no. Look, if you're Lewis and anybody else, you want to trade it, but not for me. I wonder, is George with us?
George is with us, mate. He's sitting there very patiently in a what looks like
there he is. Okay.
A necessary warm hat and a scarf. You in a scarf?
Looks like he's off to Kilimanjaro.
Yeah, pretty soon now that you mention. A year from now, I'm going up again with my son. So that's
good man.
Oh wow.
Fascinating to hear all these insights you guys have. So I catch up with all my news.
There's things going on, mate. It is. I think it is interesting because there's sort of like there's stories within stories, as there always is, and I as I say, I think the story with the Swissy, which is probably something that you'd ignore because it's so it's a smaller nation, not really kind of part of the narrative, certainly not part of the forefront of the narrative of when we consider China and America and Russia and Eurozone and stuff like that. You don't really sort of like think about the Swissy, but actually it's just tucked away in the background and doing its own thing and doing okay. It's doing all right out of all this stuff. So I really like it as a as a story right now, as an economy?
Well,
Long may it continue.
Yeah, good. Long may it continue.
So what's on your agenda, George? What's going on, mate?
Let me show you. So I'm presently looking at 3 charts actively. UK 100, German 30, Hang Seng 50. And from a price action perspective, we are now in the second leg of a possible leg 1 equals leg 2 extension. Now, what that means is that I'm going to put up the daily here. It looks a little bit messy because this is today. So just ignore that to understand what I'm talking about. So we had this bear breakout. And whenever you see a bear breakout like that, a couple of things go through, at least go through my mind. One, what is the potential measured move of that breakout itself? So from the breakout point to the end of the breakout, looking at the bear bodies, measured move is down here. So this suggests for me that we can drop all the way down to 6,800. Okay, because the bears who created this, you get a pullback, they want the same length of the breakout. That's the measured move. Now, if you apply another measured move, starting right from the top of the breakout, so that's the first leg of the move, pull back, and at the end of the pullback, which was this bull candle here, the same bears would like to see a measured move of that, which brings us almost to the same level. So these 2 levels here, which are just above that low of 2022, are magnets that, in my view, are going to pull the market down. So I don't trade on Fridays. So I was having a look just to see what happened. It was interesting that Friday failed. Well, you know, we broke just beneath the low of this huge candle, which started the leg 2 extension.
What price is that, George? Sorry, the measured move?
It's 6,813 in that zone.
Okay, yeah.
6,813, yeah. And the low of 2022 on my UK 100 is 6,738. So that area, that's where I think the bulls will come back, which means the bears will be drawn down to that zone. Now, because I'm trading the 5 minute, then I'm really interested to see how I can get into the market at the right areas, so I can just continue to go short. I mean, with this move, you know, I banked some pretty good returns, which I've managed to keep before the month ends. So I'm hoping to add on to that. Now, onto the 5 minute. So that's UK 100 today. So with my mind to go short, it really is setting up nicely. Huge candle at the open. Now, huge gap up to there. Then the bears sold. But bears failed to make that a bear candle. Bulls came in. So this bull move here so far doesn't bother me. I mean, the bulls were strong enough to create a gap up and 2 candles at the open. So, you know, their strength need to be dissipated, if we think of it that way. And that's what's happening right at the high of the opening candle. So I'm wide awake now, waiting to see if I get double top or anything, you know, forming in here. And the question becomes, of course, if you're going to take a trade, this is a classic reversal trade. The pattern is, you know, 2 or 3 patterns to look out for. But if you're taking a reversal trade, you don't put your stop anywhere above. You've got to find a measured move. So measured move takes me up to here, which is close to an area of interest for me, because that's when the bears broke into bear trend last US session. So the bears are going to be defending all of this area. Bulls want to try and break above that. So if I get a double top, stop above here, stop for the first trade, you know, I kind of build into my trades. You know, if I'm looking at 3 charts, I'm going to take trades in all 3 of them. So I never want to risk like 1%. So you know, on the first trade, so it's the third, Then when it's at 1-to-1, I go in half, 1% until I get to some astronomical risk that's all contained. And that's what I do. So I'm waiting for that. So that's pretty exciting for me. Then German 30. Just tested the breakout. So it's key resistance from the last US session. Let me just, so that double top. Whereas on the UK 100, the area of interest was this breakout into the bear trend. Okay, that's that. So now
weekly pivots around about there as well, mate, which is an interesting zone.
That's interesting. Okay. So now German 30 is ripe as well. All I'm needing is to get to a double top here, higher high, double top. Anyway, any variation for double top. I know where to put my measured move. There is a measured move, but I got a resistance level here. So just go above the low of 2021 and put that there. If it doesn't set up, I'm just going to walk away until, in fact, that's a good one just to talk about. If it doesn't set up, yes, sometimes it happens like this. So I'm waiting and waiting to see if I get a double top, and then the bears accelerate down. So I'm going to stop worrying about that if the bears close beneath, this is the low of yesterday. Then I'm just going to change how I trade. Now I'm waiting for a pullback, test the low of yesterday, find a lower high somewhere to take a trade. So either I take it here. If I don't see anything, I'm not going to take anything in this developing trading range. When I see strength, pull back, stop, and then see if we get that big move downwards.
You got a US holiday today, mate. Would that affect your thinking at all?
That's going to affect my thinking on Hang Seng 50 because for some reason I tend to see quite a strong moves when the US market opens. So UK and German 30, I'm just going to carry on, and I'll carry on to close off the UK. So that's just a couple of hours into the open of where the US would open. If nothing is set up, then I'm going. If it's set up, I take my profits.
Right.
Okay.
So I know you occasionally look at oil and gold as well. Any opinion on those things, or is it literally just these three that you've kind of managed to get down to? Just these three, and that's that.
It's just these three. I've stopped actively looking at gold, and I'll tell you why. I think I mentioned, I hope I did, in this show, the other show. When
I can understand why.
I always look back at my trades, every quarter, like now, end of June, that's going to be a big focus when the month ends. And I found with gold that I'd taken a few trades, made some good monies, but the level of analysis just been the same with everything else. So I just dropped it. I also had Bitcoin on it, hoping to see if I could trade any of those coins. Nothing set up that I could trade, so I pulled those out, and I've got the Nasdaq 100 and Euro Aussie. So I look at these, but then what I do, the ones that filter down to that daily fractal analysis, that's what I pull up. So if today it had been S&P and NDX, then I would have just taken the day off, if nothing else had set up, because there's no point waiting for that. But if it had been Euro, Aussie, and Yen, that's what I would be focused on. So I don't want to work on more than 3 charts on the 5 minutes.
Understood on that.
Yeah, because if things go your way, I don't know how you see it on your charts, 3-4 times in a month, you get these beautiful trends, bear or bull. If those materialize and you're in the right charts, you might end up just working on 2 charts, but you might end up being in 20 trades, and throughout the day, you got to figure out where is my stop loss, have I trailed, what have I done? So, I'd rather look at the end of the day and be surprised and say, I should have.
I really like that, mate. So is some of what you do, you know, with your approach, trying to figure out which of the basket of things that you look at is the one or two that is going to trend for the week or the month, and just focus on that and almost forget everything else. As soon as you've sort of decided, right, these are the ones that I think are going to be trending this week or this month, I'm going to forget everything else. I'm going to give them a cursory look, but I'm not going to put them on my main screen.
It's that, but it's a weekly basis. It's not monthly.
Okay.
So
yeah.
So I put in a bit of time. I get a slot Saturday morning or Sunday evening to say, you know, that all prior 3 days and where we are, which ones do I think are likely to move this particular week? And that's what I want to drill down to. And sometimes a close call, but I really force myself to do that, and then really focus on that. And then, you know, I can lift up my head again on Tuesday, Wednesday, and see, hey, maybe I was wrong. We range in here, but somewhere else is broken out. There might be a follow-through candle, and then switch. Maybe I've only got 4 days that I allow myself to put in 16 hours a week, Monday to Thursday, and that's it. So I really, really wanna just pare these things down and have the ones that I think most. And if I do that, you know, I find, you know, I can get a couple of trades a week, or even no trades some week. But when I look at the end of the month, it's like, wow, like I've been working hard every day. I have, because I've been watching the charts, but not been actively trading. That makes sense.
Yeah, I like that, mate. Go on, Jeff.
Mate, I'm really interested in your stop loss calculation. And conventional wisdom is that you use either a candle or a bar. The top or bottom of the bar is your stop loss, or a swing high is your stop loss, swing low is your stop loss, or above that level, or a horizontal level that's got history, round number, all those sorts of things. But you've determined that the measured move is the way to go. And I guess the question is there, have you got any data, or is it just a feeling that the conventional wisdom stop loss, let's say for a short, has been superseded, if you like, or bettered in terms of win-loss ratio, is probably the best way to go to measure that, versus where you're now putting your stop loss? Has that proven? I mean, obviously you wouldn't be doing it if you didn't feel it was better, but is there any data to back that up?
Yeah, let me I'm going to show you the data and that I look at. Just give me a second,
because that's fascinating. I think that's fascinating.
I'm going to show you. Let me just share a screen. Then so when I did my
I need to take a screenshot before you do that, and I'll put that under relaxed trader in the Trader's Almanac.
Brilliant. You know, when I did my my doctoral research, there was many ways, you know, you can go out and research. In the end, I opted for what they call the lived experience. So I was trying to find out what chief executive officers do and how they think about it. So instead of doing quantitative analysis, sending out questionnaires and all of those books, I went out into the field and actually followed them with their permission, hidden cameras, all sorts of things. This is what the guys do. Wow. And that's my approach. When I realize that I go back to my charts and I lose, and I find out I'm losing money, and yet the trades were reasonable, but the problem was the stop. I decided to invest time in analyzing my charts. Now, I do this every day. This is a chart of one day. Whenever I take trades, it takes hours, but that tells me exactly what I do. This is how things have unfolded in front of me. Now, so the data, I mean, presently, this encyclopedia that I'm working on for this year has got 500 slides. And I know all of them. I know how to search and find. I mean, like, in fact, I had a search here this morning, gap up plus book candle. I can go in there and see what happened. They get a gap up and a bull candle hundreds of times. So based on this, I then realized that the conventional wisdom which we've outlined is not the most accurate way to put a stop in the market. And the reason I say that it does make sense when if I'm starting to take a trade here, for example. So they say, look at a lower high. That's where you want to put your stop. But from Siri is trying to correct me. Let me shut it down before she says you're not honest. So, but having looked at hundreds of charts, I realized, hang on, if I'm taking, let's say, this first trade there, instead of putting the stop here, rather put the stop up here. If I'm taking that trade, put a measured move, because the market tries to come back and do a second move or a third move or a wedge. So you get stopped out, it starts to go your way. Then you go, oh man, why did I do that? By the time you wake up, it's down here. And there you can now say, okay, I'm going to take a trade lower high. That's where the conventional wisdom starts to take in. So when you're in a trend, it makes sense. But when you're taking a measured move trade, you cannot put your trade here, because by picking this top, I'm saying I'm 100% correct. That means there's no other trader the other way if I'm 100% correct. When I pick this up, I'm saying I'm aware that the market may come back and test that double top, or it may still go up, maybe, try and break above this level 3 times, 1, 2, 3, that's the wedge top. But if it does that, I don't think it's going to go up, because the bulls are interested in a measured move. So their measured move is up here, I'll put my stop above there. But once we start to accelerate down and we're in a trend, it's a different thing.
I like it. I like it.
Yeah,
Thank you.
Cool.
And I love that exhaustion bar. Where did that come from? What chart's that?
That's the Hang Seng 50.
Ooh.
A bit of sentiment cycle there as well, isn't it, mate?
There's a lot going on there. I'll have to have a look at that one.
Yeah. So that's it. And I mean, I always find it fascinating when I think about how I really go into price action, because my first introduction was through one of, I can't remember who the trader was, but Al Brooks, before he wrote his 3 latest books, had the first book, which was like a medical journal, very hard to read.
Yeah.
So I just agonized through that, and then people complained to him, and then he wrote those 3 big books, much easier to read, worked through all of that. And then when he came with his video course, it's like, do you want to watch
reading for dummies? Reading for lazy people.
It's exactly that. Do you want to read a proper book, or do you want to watch the shortened movie kind of thing? But he always says, if you want to become a good price action trader, one of the top, forget about everything I'm telling you. You have to work on your charts daily. And I took that advice probably 5-6 years ago, halfway through the journey with him. And I've been doing that daily and get these things imprinted. That's why I'm able to wait, because I know when it comes, I'm prepared, and I can start from this measured move stores. By the time one of those full days turn up, in the other day, I think I mentioned last week, still this month, I had a 9.6% return on the day. And I looked back at it and I was like, man, if you had strictly followed your rules, this could have been easily 20%. Now, this is rules on money management and where to place your stops, but because I'm working on multiple charts, default, I can just say, okay, put it up here, because there's so many things happening. But if I was working on just one chart that particular day, you'd make a lot more money.
My initial thoughts were that you're sacrificing a lot of risk to reward ratio, but at the end of the day, if you're using measured move in the right place as your stop loss, the reward's going to be multiple times, isn't it?
Yeah, it is. I mean, it's really when you're taking the reversal trades, because once it starts to move, you've banked. And I mean, my little formula for that I just call money management. I'm prepared, if things have moved and I've banked 7%, I'm prepared to put 5% in the market. And that 5% is going to be one of those very tight ones. Entry, stop, because we're moving fast. If I get stopped out, I'm down to 2%. I'm very happy for the day. But that 5%, I'm not going to put it in there and say, oh my goodness, 5%, put it up here. No, it goes there now because we're in it. Accelerate, get to 1-to-1, bank 5%, get out.
So that's almost like a hedge trade, isn't it? Because it's a freebie.
It's a freebie. It's a freebie that you really, and if you lose, you still got a good bank for the day.
I really like that. Do you? I mean, do you know what the quite a notable thing you said there as well, mate, was if you miss it, you don't mind because you know it's going to do something specific, and I think that is probably one of the keys to trading, isn't it? Is confidence in your system. If you're confident with your system and that your system works, you are more patient. It almost sort of like, you know, we always say patience is the key, but actually it's difficult to acquire that patience just out of thin air. But actually, when you start to know your strategy and you know what your strategy, you know, tends to do and how it returns, then the patience becomes a lot easier. Yeah.
I mean, you have to, the first 40 slides of this encyclopedia is all about my strategy.
Right.
That's all it is. It defines my strategy, and I go over it literally every day, just flip through it. And I can wait because when it comes, it's just execution. I'm no longer worried about strategy. Now it's a different mode. So I mean, guys get shown different ways. You gotta choose your own module. You know what I mean?
Yeah,
100%.
Yeah. Do you look at Elliott Waves at all, George? I mean, it's just interested because you sort of like talk about measured moves and stuff. Does that creep in anywhere?
What's that?
Elliott Waves.
No, don't even know.
No, nothing yet. I mean, I don't know many Elliott Waves traders. In fact, two that I've ever met, and I think neither of them were successful. So I don't know whether it's the system or.
There you go. Better jump on Elliott Waves then.
Yeah, I stopped putting indicators on MACD and RSI. When that didn't work, that's when I took them all off. So just leave EMA, those two EMAs. That's it.
Yeah, very cool, mate.
But you tried them, didn't you? And this exactly goes to the point that you just made. You've got to find your own mojo. You've got to find what works for you. And a lot of people will still use MACDs, RSIs, DMIs.
But you know, I use an RSI on my chart, but I have to say 50% of the time I'm ignoring it because it kind of goes against what I'm thinking. I'm thinking, well, that doesn't match up, so it's not relevant this time. When it matches up, then it's relevant, you know.
I remember the days of a certain unnamed coaching company, and that's when I started giving up because I'll then book my next coaching session and say, hang on a second. They are my 10 trades for last week. You said when RSI does this and MACD, no, but you should have changed whatever it is to make it work.
Of course.
That's I think the key with all that stuff is that it's generated from price. So actually you're front running it. If you can read the price, you're front running all those indicators. So the reason that I think that the RSI is useful sometimes is that it backs up everything else that I've ascertained. If it doesn't back it up, then maybe the timing's slightly out, or maybe there's sort of like some issue. But people don't trade purely off MAC. You know, institutes aren't going, you know, the MACD's doing this, so let's buy it. They've got, you know, much more important things kind of front running that. Yeah, it's just, I mean, it's a timing tool, isn't it? But it doesn't mean that it's kind of be in line every single time. So yeah, that's why I look at it very very broadly. It's not that I don't think it's of use, but I'll look at it very, very broadly. I mean, of course, if it's looking really bearish and you know, completely against what I think, then I probably wouldn't trade it. But when it's undecided, which it is most often, then I just ignore it.
You know, I'm glad you said that. Just reminded me, and I keep forgetting to talk about it. When guys study under our Brooks, he uses the 20 EMA. That's his tool. Yeah. I mean, I struggled with the 20 EMA, and I brought it down to the fact that he trades daytime New York Stock Exchange time. So that's 7.5 hour period. And if you're able to just trade that, the 20 EMA works very well. And I just said, but how do how do I take trades? Because at the time they get to the 20 EMA, it's just one little move, then it reverses. Then I was playing with the indicators, and I just happened to put, because I was doing a lot of lines when I'm in strong trends like here. I happened to put the 10 EMA, and it was like cold water over my face. It was everywhere. That in a strong breakout, price respects the 10 EMA on the 5-minute time frame on these 24/7 charts. So that for me, I mean, very rarely do I even, it's like your RSI, I could trade without the 20 EMA happily.
Yeah.
You know? So the 10 EMA, that's again from just experience and looking at charts over and trying things until you say, okay, this is how I'm gonna trade it.
Yeah, pretty interesting.
Fascinating, mate. And it looks like the harder you've worked, the luckier you've got, right?
Yeah.
Is there something about that hard work and luck? I don't know, something.
Yeah. There's no truer words were ever spoken. I don't think it's, you get nothing for nothing. It's as simple as that.
Yeah.
We will let you go, mate, so you can have your day off this afternoon.
Yeah, for sure. I'm looking forward to it.
Thanks, George.
I'm sure you will.
Really interesting stuff.
All right, guys. Cheers.
Yep.
Take care.
Thanks for sharing, mate. Really appreciate it.
Live trading profits this Wednesday, 9:30 GMT, 45 minutes.
Fantastic.
There you go, guys. You can join George then, and he will guide you through all of that he's just discussed. Fantastic stuff. Right, mate. How are you doing?
Yeah, doing well, mate. Doing well. Ftse's going in the right direction, but it's you know, it's going to take a little while to probably get to the target. But you know, there's not. Oh, we were going to talk about oil, weren't we?
Yep. Show us oil.
Okay, let's have a quick look at this then.
What a shame we couldn't catch up with Simon today, because Bitcoin is under 20,000 now.
Yes, big problems, mate. I mean, it's, you know, I don't know if you heard about Celsius last week, but one of the major exchanges stopped anybody withdrawing money, withdrawing their cryptos from the Celsius exchange.
Oh, I think I heard you say that. Yeah.
I mean, that is just danger zone straight away. You know,
there's alarm bells going there.
It's alarm bells. There's panic. You know, there's so much stuff kind of going on. Difficult, really, because I think, you know, Bitcoin is at a level of support, but it's no different to what we were just talking about with the yen. Why would you buy it? And it's very difficult to find a reason to buy it at this particular stage. You know, I think that it will come back in time. And people, there's a lot of investment that's gone into it. A lot of people have lost billions, really. I mean, you know, hundreds of thousands and millions and billions. Some of the bigger players over the course of the last few months, but there's still money. There's still investment sort of in there. You know, you've got the likes of El Salvador obviously have started to invest in Bitcoin, so that there is money and there is some interest in the crypto space. So I don't think it's going away, but I just don't see the timing being right now. At some point, things are going to get to the fair value level, and I think Bitcoin is probably there already. I think that there's some NASDAQ companies that are probably there already. There's probably some S&P companies that are there already as well. But the problem is that we don't know how long this goes, and the longer it goes on, that fair value starts to change. You know, we're kind of there, maybe slightly below it now. But if the Fed continue to hike interest rates, and particularly if we get stagflation, then assets and particularly growth assets are just going to look pretty bleak for quite some time. I wonder whether you know, oftentimes we sort of say, and it might well be the case for the yen, oftentimes we kind of say, this will reverse and you won't get the chance to get in. But I think we're probably much more likely to get a decent signal that, or, you know, at least green shoots. That's all we need to see, just some green shoots. Now, they're not there yet. So until those green shoots of recovery start to at least sprout, you know, in some respects, in some regard, then I'd personally be staying away from cryptocurrencies. You know, I wouldn't be adding to any positions at this particular stage. I think it could float around here for a while, which is absolutely fine. I don't think you're going to miss this particular price if it does float around here, because if it floats around here, then we see the green shoots, then you get in.
As you say, you probably need a reason right now. What is the reason?
Yeah, exactly.
We
Lewis,
need to have a
Lewis is
reason to
saying
come
that,
up on the horizon.
yes. Lewis saying that someone's being interviewed on the news channel saying that Bitcoin and ETH are going to zero. And I think we need to be careful with that, because it's no different to the people saying it's going to 100,000 or 1 million. I just think that people will, this is where news channels fill their airtime, isn't it? And it's easy to say that when it's coming down, but it doesn't necessarily mean
it's gone down 75%, and now they're starting to say it's a bear market. Really?
Yeah.
Congratulations.
Well, exactly. Yeah. I mean, we always get calls for Bitcoin going to zero and going to 100,000. It just depends on which side of the fence you want to sit on, and for that reason, I think it's better to go put in as much as you can afford. If you believe in the project, if you don't believe in the project, then forget it. But if you believe in the project, put in what you can afford to lose, and try and get the best possible price, and just ignore it. But don't put all your eggs into that basket, because what we've seen again is an asset class which is dropping. What happened when oil was down to $30 a barrel or below? I mean, where did it get to, Jeff? Can you remember? We got pretty much negative.
Yeah, that's right. It was, they were paying you to produce it. Sorry,
they're paying you to produce it.
Producers were paying you to take it.
So we get these moments in products. Products just do this thing, and then all of a sudden it goes up to $100 a barrel, and that's all forgotten about. So while people are talking about Bitcoin going to zero, I think it becomes even more interesting, to actually look to buy it, because hopefully it will drive the price low enough to make it cheap. But I don't subscribe to people that say that stuff. And it's not that they won't be right. They might be right. But as I say, if you look at oil and what happened with oil, and then everybody's saying, well, we're going to have to start looking at green energy and all this sort of thing. So it's never coming back. They were royally wrong very, very quickly. The same thing happened with the NASDAQ.
Of course, they're looking at green energy, but the truth of the matter is 90% plus of everything that moves on the planet runs on oil.
Which is Bitcoin's big problem, mate, because obviously technology actually can advance a lot quicker. When it comes down to commodities are commodities. It's stuff that you can touch. Whereas something like Bitcoin, that is the one sort of caveat to all this, is that actually Bitcoin could go to zero because something could supersede it. It might get so heavily regulated that it's not interesting anymore. There's lots of sort of aspects which could the argument could be made a lot more convincingly than you could do with the likes of oil. So
yes, because it really does have no intrinsic value at this point.
Exactly that. But oil obviously does, because you got to move. Now, this is interesting, I think, with oil, because now we've seen a decent retracement. This is a bar that I think that you're going to tell us about, mate, and you're obviously going to say that's well, not obviously. I'm presuming you'd say that's a game changer bar, and it's significantly bearish to drive the price lower, which I'll be happy to subscribe to. But I think the fundamentals just don't match up for a lower price in oil. They're not sufficient to match up for a significantly lower price in oil. So even if it does come lower, eventually it's going to go higher, in my opinion. I mean, would you say that would qualify close enough to a double top there as well?
100% I would. And you've got two bearish engulfing bars that have really stated that there's an issue right here at this price level. Now to trade that is gutsy, but to trade a lower high, not so gutsy. I think that makes sense. Yeah. But I can't trade that right now.
No, and I don't think I'd be looking at that at this particular stage either. And I think we do need to just wait on it, because what I see with oil is just a little bit more room here to the downside, just a tiny bit. If we tighten these lines up, it looks like it could drop down to around about maybe about 106. So a couple of dollars less, but I think this is potentially the bottom of this particular move before we get a move back up again. Whether that move goes to the monthly pivot, whether it goes to the weekly pivot, whether it goes to this particular level here of resistance, or whether it starts to go through that level is difficult to know. But I think that that is a potential bounce point. And I personally would say the bounce points is going to hold this first time around, because I just don't see the, I don't see the reason for it changing.
Yeah, look, what I can see there as well is that range in between the two highs. And I can envisage price staying in there for a bit as well.
Yeah, I agree with that. I agree with that. Yeah, no, Lewis is just saying that when someone said that, more people heard it, and it might become a sentiment talking back on Bitcoin. Yeah, I think it's kind of possible. But if you think like Charlie Munger and Warren Buffett have basically said that Bitcoin is a piece of junk for time. They just, you know, so many people have just said it is just a load of rubbish, and it's still rallied. So I'm not sure. See, the scary thing is, if we go towards CBDCs, that means the central bank in every single country basically control us. You know, they control everything about what we do. They can control our money. They can figure out what we're spending. They can stop us spending if they look at our accounts and see that we're spending in the wrong area. We're becoming too speculative. It's a really dangerous world if the central bank produce CBDCs and we go in that particular direction. But people like crypto. People like the crypto space. Otherwise, central banks wouldn't be looking at it. The beautiful thing about Bitcoin is that it's decentralized. And I don't really, and as is cash. So if you want to get back to the closest thing of cash, then you kind of, you know, Bitcoin is it. So I just can't see people adopting a CBDC. I just don't see that being the future. I think they'll try and peddle it around. They might convince a few people, but I don't think people will go down that route.
Yeah, look, I don't know where it goes. And as I've always said, the technology is sound, and I believe it will be part of the future. What that looks like, I've got absolutely no idea. But the interesting part for me right now is the fact that, and I don't know how many people buy Bitcoin at $60-something thousand. I really don't. But those who did, even at 40,000 or 30,000 now, have got very, very bad taste in their mouth.
Yeah.
And how that comes back from there is probably on the back of, or on the shoulder of giants only at this point. And are they willing to put that back into something that has, for want of a better expression, pumped and dumped so many times?
Yes.
It just becomes so unreliable to trade, one would think. To invest in, different story. And again, that goes back to the technology, not the asset, if you like. But that is my concern with Bitcoin, and where and it's been propagated so many times over with NFTs, with the last one, right? But before that, dodgy coins and altcoins, and there's just so many derivatives of that one thing. And how many people have been burnt with those derivatives? It's unbelievable. Really.
It is, mate. It's countless. It is. It's a wild west, and I think I'm somebody that is I'm a supporter of the crypto space, and I suppose I've been fortunate, really, that I got into something purely out of luck when it was right on the bottom. So when it sort of like starts to go up, all the other stuff which is kind of like maybe not done so well on the way down has been kind of nicely covered by that first very, very lucky trade. So it's a bit easier for me to be comfortable about it, but by the same token, it's better to be in that place, because you've got to be quite clear-minded about it. If you're going to invest in it, you've got to be clear-minded. And the only way you can do that really is to, as I say, believe in the products and don't over leverage your money with this sort of thing. Don't look for Bitcoin or Ethereum or Cardano or Binance Coin or any of them, Solana. Just don't look for that to be your millionaire or billionaire maker, because very few people kind of really experience that. And that's been the issue, is the news yet again. The media drive us towards an asset class and overinflate it and make it sound like Hollywood and drag everybody into it, kind of like the uneducated into it. Those people that were late on the train get dragged into it. They over leverage, and then all of a sudden they're completely destroyed. But it's got nothing to do with a poor asset. It's really down to do with media filling time and people with a lack of education. And I don't want to kind of put it so coarsely, but really it's greed. And probably greed coming from the right place in many respects. People just want to kind of get out of their situation. But it is really, it's greed rather than sort of like going, let's just get down to some decent work and see if we can actually figure this thing out. See if we can tame this beast. Because if you tame it, you're dandy anyway. But you just have got to recognize that it does take a few hours, you know, it takes some time to kind of get on that hockey stick. But when you're on the 100%. Hockey stick, it's a great place to be. But yeah, it's quite sad, really, mate. But
it is. And on the flip side of that, I'm not concerned about what happens with that. Really, at the end of the day, my focus now in the next 12 to 18 months, maybe 2 years, is going to be buying stocks that have just lost their value.
Yeah,
and I don't think that's finished yet, to be honest, because we were in such a bubble. We were so overpriced, and you know, I'm no economist, but every single person that's got any idea has been talking about this for a long, long time, right? Yeah. And it's no surprise that it's upon us. The only surprise is that I actually managed to get into one of them for me. Yeah. And I'm really, really keen to learn as much as I can about stocks and equities in the next, 6 months or so, because there's just going to be massive opportunities coming up, and I want to be part of that.
Yeah. Well, I mean, you know what, we could easily do a section on that stuff, mate. I mean, we could definitely dive into that, but whether we've got enough time, I don't know. You know, the show is quite packed at the minute, but an area on stocks would be kind of cool. You know, I would certainly be able to give enough information about how to look around for stocks to get us all kind of started on the whole thing. But as I say, I don't know whether we've packed the show full of so much time that that's just not going to be possible.
Well, here's an idea. We might set up an account. And we can have a stock of the week. I think we need to start it. I think we need to start it any time soon, because this has got a ways to go yet to pan out. But we could start a little account and have stock of the week, and the money that we make at the end of the year, we'll shout everyone to Bali and have a good old time, right?
Oh, Gordon's doing it. Oh, Gordon's doing it apparently. So Lewis tells us.
Doing what?
He's actually doing stocks. I think he actually does go into stocks and a bit more fundamental analysis. Thanks, Lewis. So actually, we might be covered, mate.
That means I've got to stay up till... No, that's not going to happen. Is it recorded?
I don't know. Probably somewhere.
Probably somewhere. Yeah, all right. We better get out of here, mate.
Yep, absolutely right. Thanks to the guys in the room. As always, we had a couple more in today, which is nice to see you guys in. Big thanks to George for joining us. Big thanks to Jeff for being my trading buddy and the host of the show. Well done for looking after us today, mate.
I'm not sure how many people I didn't let in, but I think we managed to get there. Australian stocks, Gary? Yeah, why not, mate? Why not? Let's work on that. I think we can have a trading account. We can trade them live on a Monday. Monday's a good day to trade.
It certainly
why
is.
Not? I'll organise that. Righto, guys. Have a great week ahead. I believe Simon will be joining us on Thursday. Hopefully that's the case, and we can have a little bit more chit chat about somebody who knows a little bit more than certainly I do about what might or might not happen with Bitcoin. We shall see. Have a great week, mate.
You too, buddy.
Thank you all for being our trading buddies, and we'll catch up with you on Thursday. Have a good week. Bye-bye.